So much has happened right now when you look at what's going on with people's bills, unable to afford them, what's going on with credit card debt, what's happening with people's emergency savings. A lot of this is being underreported, and that's why you came here. You came here for the truth. I'm about to bring you some information related to the energy crisis that is ongoing and what's happening with infrastructure. There is so much to cover, so let's begin right here. Short on cash, more Americans tap their 401k savings for emergencies. A rise in hardship withdrawals from retirement accounts is driven by financial strain and loose regulation, plan providers say. When I covered this before, bringing it to you right now, there has been a trend here. So more people are doing this. I've talked about it so many times. Looking at credit card usage at an absolute record high. We can see that the buy now, pay later is at a record as well. You are looking at these services coming through because people are cash strapped. They do not have what they once did. The stimulus has worn off. And so for a lot of people, they're working those 2 jobs, 3 jobs, and it is not enough to make ends meet. Why is that the case? Because the average rent has basically doubled in most areas. The mortgage payments that people have to pay, especially now as rates have risen, has gone up tremendously, especially for those that had kind of just got in, or if they're on variable mortgage rates. Looking at this on a global level, a lot of people are on variable. Okay, it's not where we see some places like the United States where there's a lower percentage. Some places 25% like in Canada, or much higher in Australia. Other places they use a lot of that variable rate. So people are into that, using taking risk, in my opinion, and of course as a result they're in dire straits right here and now. A record 2.8% of the 5 million people in the 401k plans run by Vanguard tapped their retirement savings in 2022 to cope with hardships such as medical bills, eviction, and foreclosure. And that, of course, is up from where we were before. It's not an extreme amount, but it does give us a signal. Parents pay at least one monthly bill for 40% of millennials. And this is something that cannot be sustained long term, of course. You can't just have this kind of action taking place. It cannot be sustained. We know that because the parents themselves are having their own issues. Yes, they might have some equity build up in their home, but that isn't something that looks good over a long period, okay? We need to realize this. The stock market going up at this time is not going to save everybody, especially when people have to pull out from that stock market in their 401k, taking the tax bill as a result of that as well. Okay, look at this. Given what we've seen in a number of data releases over the last month and over the last couple of weeks, businesses are doing their best to hold on to as many jobs as they can. I think they're really looking to shed workers through attrition, people quitting, and people retiring. This is talking about jobs and the way that the jobs market has changed. Because before, there wasn't really an issue, okay? There wasn't this problem. Now today, we cannot even get workers. People have help wanted signs in every single storefront, and they cannot get the workers. In fact, there are millions of vacant jobs right now today. The market is so desperate to find in anything reason that the Fed is going to pivot. The first really weak employment report, the market will be very happy to see. You see that? Because they want to be sure that the Federal Reserve is going to start cutting rates. That's what I'm trying to get at right here. And then some unusual, like I try to bring you the little bit of anecdotal evidence wherever I can. This is from FreightWaves. Cardboard box demand plunging at rates unseen since the Great Recession. This might be a box bloodbath. That should tell you something, because there's way too much inventory. When I look at the data, when I've shown you the statistics before, there is way too much inventory. And this could be for Target, Walmart, Lululemon, and so many other companies. But now you're actually seeing it come up in another piece of evidence, and that's cardboard boxes. It's not as if they're doing away with cardboard. Absolutely not. This is giving us the insight that there's just less stuff that's being required, being purchased, being imported and exported as well. And that is a telltale sign of the economy, the real economy. The stock market can go straight up into the sky. The economy, on the other hand, Not necessarily the case. Look at this, Adani. Okay, Adani from India, looking at how this is basically talking about the stock. It's been pummeled, losing $108 billion of value like rapidly. They show you the stock in here. But one thing I wanted to mention was the relation between Adani and the Prime Minister of India, Modi. They've been close for decades. His business, with investments in capital-intensive projects such as airports, power plants, data centers, is at the heart of Modi's growth agenda. As a national champion, the tycoon has aligned his business interests with Modi's development goals, often stepping in where the state lacks resources or competence, helping create thousands of jobs. I point this out because I believe if we do see this company fall further and further, it weakens, maybe they start laying people off, maybe perhaps this will have an impact on India's economy, which now becoming the most populous country in the world, they need to see some growth. They absolutely need that. And I'm interested to see how these two will be affected by this all in the coming weeks and months. Okay, let's keep an eye on that. Well, I thought it was interesting to look at because when you think of infrastructure, you generally think of like airports and roads and stuff. But in this, they talk about how things have changed and infrastructure is not the same as it once was. While infrastructure might make you think of ports and toll roads, everything from data centers to phone networks is now put under that heading. Since Intel and Brookfield's joint venture last year, there have been more companies looking to do similar deals. They call it, global digital infrastructure. Within corporates broadly, there's a lot of embedded infrastructure that very well could lead to the creation of interesting partnerships. So there are, in fact, very positive developments with a lot of these companies, but where is the investment coming from? A lot of it is going to be from government. Government contracts are where you need to keep your eyes out. So if you're an investor, if you're looking at this saying, oh my goodness, it's so weak, look at the consumer. Well, they're not going to buy up this. They're not going to buy up that. Look what happened with Apple. One of their worst reports. Amazon, even though their ad revenue had gone up, I believe total revenue had gone down. Like so many different companies, massive companies, their reported earnings and they weren't very good. However, where is the unlimited money coming from? It's the government. The government claims to have an unlimited checkbook, and they are the ones you need to watch as an investor. Okay, if you want to have your money somewhere, at least make it where the government's pouring the trillions. This is just showing us new orders declining down, okay? Manufacturing new orders not good in the US right now today. And this is excluding transportation. We've seen this before. We've seen these dips. Looking at the downturns, this could be something significant to watch. So let's keep an eye on that. Some of these companies, despite any potential downturn, their stocks could literally go to the moon. ExxonMobil, Chevron's big cash shows cheap gas isn't coming back. What I thought was interesting was the first line. Chevron announced a $75 billion stock buyback and raised its dividend to 3.44%. ExxonMobil paid $30 billion in dividends and buybacks in 2022. So the money is just going there. Shareholders are obviously loving this. And, there's going to be more investment. There is going to be more investment in these type of companies, despite the fact that literally trillions of dollars is going into green energy right now today. Oil giant Shell posts the highest ever annual profit of $40 billion. Some extreme numbers that I've been seeing out of this industry that was said to be put out of business absolutely does not look like that is the case right now. And I'm just getting a report right here. Adani Enterprises plunges 35% as rout deepens. So let's keep an eye on that as well. I just saw that coming through on my screens. Wanted to mention that to you as this video is recording. Soaring profits are a feature of Europe's energy crisis. So one effect of the energy crunch has become clear. Companies that sell power, oil, and gas are making a fortune. And there are more when they come to European Union ban on Russian fuels comes into place this month. So let's see what happens. They're going to make a lot of money, okay? They're going to make a lot of money because the transition over to green energy isn't going to happen overnight, and who knows what's even going to happen long term. So just be aware of that, okay? As an investor, people were scared to get into energy. Like, no, I'm not doing that. I'm just going to buy whatever, just named tech stock, hot tech stock. I'm in it. That's it. Invest in what you know. Well, I was telling people in 2020, look at energy, look at commodities, look at energy, look at commodities. It's interesting. Hey, hello. But you got to do whatever makes you feel good, I guess. South Africa's energy crisis could spark a political and economic disaster. So watch out, because when you look at it globally, there's a lot going on here. And when energy prices get too high, gasoline, particular commodities like food, you will have civil unrest that will destroy the economy or potentially just weaken the economy. And look at Lebanon today. Look at Lebanon, what's happening. A 90% devaluation of their currency overnight. They've been dealing with so much over the past few years. This is one country that was so strong at one point, and now it's changed. So watch out. Where you are today is not where you'll be tomorrow. Hopefully it's better, but it's not necessarily the case. Eskom is operating at 50% capacity with rolling blackouts that are causing civil unrest and economic hardship. So I say to you, watch out in South Africa. That is my message, okay? The same situation could be for, we're seeing Pakistan power outages all over the place, okay? Watch out. Power outages, high food prices, these are very, very dangerous. Russia's pipeline gas exports to Europe slumped to a record low. This is going to keep happening, but the question is, where are they making up for that? They're not going to be able to refuel. They're not going to be able to have those storages in place this summer so that they can be okay next winter. They don't have a plan for next winter. They have to get those storage up. That's not happening at this point. This is good news, I would say, economically, because apparently they're moving towards approval for a major Alaska oil drilling project. How long that takes to get online, obviously that is an issue. But the US needs to have its own energy independence, just like most other countries need the same thing, okay? Energy independence is so critical, so important, especially when you're, back and forth with China, Russia, all these different countries. You need to watch out, okay? So that domestic consumption is necessary. That's my opinion on that. And then we have this, it's talking about the Coastal Gas Link project. The cost of this is now more than double the original estimate, as labor woes plague a pipeline that will supply Canada's first major liquefied natural gas export plant. I just mentioned the fact that every time we see delays, we see increased costs, we see shutdowns, we see disruptions, like look at Nord Stream 2, all of these different things have been happening, creating a boom for these particular companies. Like, it doesn't matter. Like, look at all these energy companies. They're doing so well. And that's one aspect. But the prices that you pay for your energy don't look like they're going to be coming down anytime soon. I mean, that's the reality of the situation that we are in today. It is truly unfortunate. But for a lot of people, what I say is get your situation in order as best you can. I have my playlist, how-to and solutions. That is really key because it gets into a lot of things that are very helpful to people. If you haven't read my 2 books already, check out the how-to and solutions playlist. I have my other playlist on there that should be of help to you as well. If you found this informative, hit that subscribe button and it's right next to the like button down below so that I can bring you another video tomorrow. You don't want to miss it. Take care. See you then.